As the markets recovered, COSM was actually pushing to the upside for a pretty nice time until the end, where the broader market started showing some bleeding. However, we have some futures contracts to take a look at to potentially see the future for COSM in the coming week. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a COSM technicals, raw price action, and statistical thread of analysis on this happy Friday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, team, so please take a look at this. This is the micro E-mini Russell 2000 futures contracts. And we are looking at the spot price action here of the Russell 2000 ETF. Apologies about that. So what I want to mention here is actually this. Please notice that both of the futures contracts, it's the CME versus the spot price action of the ETF, they're both getting a daily read here of a potential bullish golden cross about to happen. And that usually happens when the 50-day simple moving average, which is represented by that baby blue line, crosses upside of the purple SMA 200. So that is a golden cross, and notably on the daily time frame. Okay, so that actually represents a potential bull market introduction here. Okay, so this is very, very good. We're getting it on the daily right now because if you start looking back through other time frames, we've already gotten that golden cross. Right here it is, golden cross there. This is the golden cross right over here. You see the label, right? My algorithm tells you a label when it gives you a label whenever it happens. Here's the golden cross. And yeah, this would be right back here, right? This is the golden cross here. Okay, so this is cascading into the larger time frames, and now we're about to approach the daily time frame where we're about to get that cross. So it is only normal for price action to come back down and try to validate the cross here of the SMA 50 over the SMA 200. Okay, so I want you to actually pay attention to this middle candle right here. Okay, so just so you can see the correlation of the broader markets versus COSM. Okay, so as you can see here, COSM got that little bit of a hammer print here. You can see the hammer print as well on the IWM and also on the futures contracts. You can see a similar situation there. So I tend to keep a deeper consideration for CME on futures contracts rather than spot price action because I do feel that it has a little bit more of an edge for us. Okay, so yeah, so anyway, we do have that recovery right on the following candle. You can also see the recovery here on IWM. Of course, we ended up recovering too. Right, so now the downside that we faced here was particular to the after hours. Okay, so the after hours did face a little bit of pressures on the SPY and the TQQQ and the Nasdaq. Right, so of course we're going to face some of those broader market influences. So let's go ahead and move on to the next chart and show you what those signals are looking like. Okay, but first of all, let me go ahead and talk about the on balance volume here, which is this indicator showing you that neon green line. What you are observing here is actually the COSM asset ownership throughout the time. So specifically starting from November 10th, 2022 here was when we started getting that nice little ebb and flow and increase in ownership of the asset. So I can't tell whose ownership here, right? We're only this is only telling us that there is existing ownership and holding. Okay, so as the time moved on and as we started getting some of these upsides, some of these crazy upsides, ownership to the asset has been acquired and has been held. Okay, so you can see right over here that this is in fact another just iteration here of holding the asset forever. Okay, despite whatever is happening, the asset is being held. Okay, so and in fact there is if you see this very closely, yeah, we are seeing a clear up run here still. So it's still being acquired. Okay, you guys, so this is absolutely good. It's absolutely good for the asset, and it's absolutely good for the future of the price of the asset. Okay, so let's move on to the next chart, and this is going to be diving into one more speculation, which is a psychological metric. Okay, so we were speaking about iterations that last about 14 days on average. We're at about 18 days now, and this is that 14-day average before we get an upside, right? So it's right. Actually, you know what? Let's find out to see how far we are. It could be over 14 days already. I mean, 18 days already. Yeah, in fact, we're at 22 days. And still kind of consolidating, right? Even after we noticed that this iteration was very, very much like each other. Okay, so one more thing that I wanted to point out is that usually when we start facing the bottom sides of the range, like this capitulation candle here at about 290, you see how price action reacts to those targets. Okay, so that means that there are bulls waiting for that target at the downside. I'm not saying that we're going to go there. I'm just saying that in the event where we did consider dropping below the area of 291, which is the low of this candle here, then yeah, there could be a pretty substantial bounce to face. Okay, so as let's see, the 291 target, I think it was let's see, so this is 289 here. Right, so yeah, there has been a lot of rhyming within that 287 to about 291. Okay, so in case there is a failure here, team, I want you to know that there is a secondary support just in case, 277 to 287. Okay, so we'll keep an eye on that. Okay, so another thing to notice here, one more thing to notice within this chart is in fact the clear indication of increasing volume with the increasing volume with I guess arguably some lower high price action. So that is a bullish divergence. Okay, so price action price action is in fact recovering because we're actually coming out from 290 here, and now we're closing to 307. Right, so that's and we actually closed at 309, I think, at the daily. Yeah, 309 at traditional market close. So now that we're getting this right over here, so we're getting this low, a higher low, and yet again another higher low with increasing price action, that is bullish. Okay, so that we are getting shorter time frame indications of a continuation to the upside, and these are more of reasons of why we're looking at this. Okay, so please remember that first of all, this signal has not fired just yet, and in fact I'm mentioning it now again because we're getting extremely close to firing it. Okay, so what do I mean by that? Anytime that volatility has fallen into the critical contraction zone, which is within the 15 percentile, and started an expansion phase, I have taken note of when volatility crosses above the 15 percentile and meets stochastic momentum with an upside pivot. So I've taken note of that iteration's duration, the iteration's upside thrust, versus the amount of times that the iteration or the profile of volatility versus momentum guessed the upside correctly versus incorrectly. So in this case, the 8-hour time frame is showing us some pretty nice numbers here for us to look at. Okay, so out of 16 total iterations throughout the entire trading history of the COSM asset on the 8-hour chart, which are right over here, right? These are all the iterations there. You are looking at 12 that were guessed correctly to the upside, giving us an upside accuracy of 75% with an average upside thrust of about 115.23% over the span of about 6.16 days. Okay, so why I'm pointing this out is because the last time we looked at this, we were down here, and you can see that volatility is increasing. So as soon as we do cross upside of that 15 percentile and we have an upside on stochastics, then yes, that would be a clear indication and a criteria met for us to apply this metric. Okay, so now moving further beyond these statistics, I still have to run the standard deviation based on this one here because, for example, this has a standard deviation of 298.45 with a higher bound of the first standard deviation landing at 413%. I'm uncomfortable to talk about those targets right now as they're leading to around $16. So that's just it's a little too much for me to worry about. I would like to focus one step at a time, right? So now the daily time frame also has a setup coming in that's particular to contractive levels into expansion phase. Okay, so this is what I mean here. You can see that the daily the volatility represented by this indicator, BBWP, is maxed at the bottom of contraction, meaning very, very little shares being traded. Okay, so what this is telling me is that usually when we are at these critical contractive zones, there is mathematically speaking, it is programmed to expand, and that would create buying pressure here for the asset. Okay, so let's look at the iterations on this one. So the back test here, which is the same condition that the 6 hour. Yeah, it's the 8 hour. Sorry, it is the same condition. Okay, the point of expansion beyond the 15 percentile with paired with stochastic momentum. Okay, so that exact strategy is applied here on the daily as well. So the daily is giving us. And it's not fired yet, of course. Please remember that it's not fired yet. We are waiting for this to actually pivot upside of the 15 percentile, and that would essentially validate the criteria for the move to the upside. Okay, so we are preparing for it now. We are identifying it now so that we are prepared for when this does realize that potential nice upside move. Okay, so now speaking of the data, you are getting 37 iterations here total, of which 33 were guessed correctly to the upside. I'm sorry that this is incorrect here, right? Actually, I can give you that. I can give you that metric now. I forgot to change the one thing right there, which was the accuracy, right? So let me just go ahead and calculate that real fast for us, if it even matters to you, right? So sometimes some people don't care. So let's see, at 39, right? So that is 84. Yeah, that is, I'm sorry, it's 37. So let me go ahead and get that change right there. Yeah, so that gives us an 89 spot, 18% upside accuracy. Very, very impressive. So let's see, 89 spot, 18, right? Did we say that? Let's collect it here so that we always have it. Right, yeah, so this is the upside accuracy we're getting based on 33 correct iterations out of 37 with an average upside thrust of about 28.06% over the span of about 14 days, okay? So, of course, we would need to get a little more upside here, right? Increase some upside so that we can, or face a downside, right? So that we can increase volatility even harder and then correct to the upside, whatever needs to be done so we can increase volatility here beyond the 15 percentile, which would essentially be the firing of the signal. Yeah, so let's just say, for example, we were to expand from the current position, right? So we'll take into consideration the current price of 309 and add 28.06% to the price action. Okay, so statistically speaking, this would lead us to, let's see, 28. Here we go. I think that's about as close as I'm going to, yeah, that's about fine. So that would lead us to just under $4, which is very confluent to the top side of the range that we've been facing for literally weeks and weeks, right? So that's it's very curious that it would take us to that target there. Okay, so remember that this is the daily. Move to the upside. We have an 8-hour already getting ready to fire. We do have an upside pivot on stochastics, and we're increasing that volatility. We're getting very close to that 15 percentile. Okay, and this move is consistent of about 15% on average. And what I can say is that as this is making its upside here, it's going to validate the move to the upside. We can, I mean, in all theory here, right? This is theoretical. We can succeed the 115% to the upside, and that'll essentially push this. That'll essentially push the volatility into the validation zone. So then we could add another 28.06% to the 115, and that'll take us where it will. Okay, so yeah, this is what I'm looking at, team. And I think that the upside is not going to be so much of a company-specific reason. I think it's actually going to be more of the broader market sentiment, right? But we're about to face that golden cross on futures and spot price action on the daily. So that upside from this macro perspective would essentially pressure COSM to the upside. Okay, I'm sorry that this video has gone on a little bit long here, but I felt that there were a lot of things to keep into consideration. The reason why I said that there is there could still be a downside here, and I would like it so that we can increase volatility, is to express absolute transparency here. Let me go ahead and just open up. Yeah, I think I'll do it here, right? So, right, yesterday when we were on a space call, we were noticing that this is an algorithm that I'm going to be re-releasing to the public, right? So of indicators. So this is DBSI, and this is giving us the rate or strength of bulls versus bears. So this is the percentile strength difference between bears and bulls. And yesterday we noticed that we were at a clear 87% bear strength, and that has minimized drastically to 66% on the day. So that's another indication of a potential something coming. Okay, so let's go ahead and open up the bi-monthly chart here, as there is something very critically important to show you, and the reason why we could have faced that downside to 291. Okay, so what you're observing here is actually, let me just go ahead and get rid of the the OBV. All right, there we go. So I'm just gonna get rid of this too. All right, so yeah, what you're looking at here is a bearish engulfing, right? So this is the bi-monthly candle that we just closed on this past Friday. So this is a red candle engulfing the prior green one entirely with its body. That suggests a potential downside to come in, of which we did face. So now, again, I'm not saying that 291 was the absolute floor, because anything can happen from here. We can, in fact, come back down to the area that I told you about of 277 to 87 to get that really strong spring to the upside. Although the 291 has been, it's looking like it's powerful enough, right? So, we're gonna have to go ahead and keep an eye on all of these things. But this this right here gets me even more bullish that we could face a downside here to 277 to 287, because usually when you start to get these capitulation events after a long time of consolidation, you get that huge downside event. That would be one wick as a spring to the upside, or what Wyckoff tends to call as a terminal shakeout before that up run, right? So that's kind of what I'm looking at for ticker symbol COSM. And of course, it's a little bit difficult for me to identify where we could be going in the immediate short term, seeing that everything is consolidating, right? So if I were to prefer anything, if I were to suggest anything at all, then I would suggest a potential downside starting in the immediate short term, right? So I would say intraday, we can face support touch right at about 299. And I would say the lowest zone could be at around 295. Okay, so right around there is what I'm looking at. That would be a retouch of that support, just for more and more validation here, right? So as you can see here, we are crossing on the futures contracts 30-minute and the spot price action. We're crossing beneath the SMA 200 and still suggesting a downside here. So that's set to come down to around 183.55. We're at 184.86 there. Okay, and yes, if you're curious on this side too, this is the drop that we're looking at to the SMA 50, and that would drop to $1,864, and that's why I'm saying that this drop could actually be ever so slight to around that target of about 298 to about 296. Okay, team, so keep those targets in mind. We should, and we'll evaluate a potential bounce from there, but there are a lot of things and a lot of setups that are starting to happen here. Okay, team, please remember first and foremost that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good weekend, and I will catch you at the bell on Monday. Adios.